Mortgage Mark here to talk about mortgage insurance and how to get rid of it. So first and foremost, guys, MI can be known as many things. It can be known as mortgage insurance, MI, MIP, PMI. Honestly, generically speaking, from a layman's perspective, they're all the same, but they're actually very different and they are related to each specific program. So for example, the MIP that's associated with FHA home loans, typically that doesn't go away, at least not for most FHA home loans. There are certain criteria for it. So what I'm going to talk about here is the cancellation of conforming conventional mortgage loans. So kind of your generic plain vanilla Fannie Freddie loans. So if you have a loan that you think you might be able to get rid of MI, typically good rule of thumb is look for 20% equity position. So if you bought a home or own a home and you think that today's value is so high that your current loan balance is at 80% or less, that's a good starting point. First and foremost, I would say call your mortgage servicer and ask them about their MI cancellation policy for your particular loan. They'll probably say, hey, we'll send you something in the mail. That's normal. So when you get it in the mail, they'll outline all the details of what you need to know. Typically, what you'll find is they'll require what's called a BPO, a broker's price opinion. Think of it like an appraisal light. They're just going to send somebody that they have, whether it's a third party or somebody on staff, to go in and basically drive by your house and give it some sort of assessed value. So realize they're not coming in your home, guys, so it may not be perfect. But from that, that's where they're going to determine the value to see if your MI can get removed. A lot of times it could be that you need the 80%. You might need 78% equity or 22% equity with a 78% loan to value, or even 25%. Those numbers can range based on how long you've owned your home and kind of what the overall loan program looks like. So guys, if you have questions, call us. The first thing you need to do is know what type of loan you currently have, and again, what the policies are for your mortgage servicer. So first and foremost, call your mortgage company, say, hey, what do I got to do to get rid of MI? You don't have to refinance, although you may, depending on just what you're trying to do. But call us and let us know what you're looking at, and then we'll walk you through those steps to talk to you more about what you can possibly do.